American financial defense is a concept that joins economics, security, governance, and public confidence into a single national effort. It is not limited to military budgets or emergency reserves. It is a living system that protects the strength of the economy, the trust of the people, and the ability of institutions to function under pressure. In a world where markets move at digital speed and capital crosses borders in seconds, financial stability is no longer only an economic goal. It is a form of national defense. The American economy is one of the most complex structures ever created. It connects households, businesses, banks, governments, and global partners through millions of daily transactions. Each transaction carries not only value but also information and risk. When this system is strong, it supports innovation, employment, and growth. When it is weak, the effects travel quickly and deeply into social life. Financial defense therefore begins with the understanding that economic stability is inseparable from social and political stability. At the heart of American financial defense stands the role of public institutions. The Treasury, the Federal Reserve, regulatory agencies, and legislative bodies share responsibility for guarding the system. Their tools include monetary policy, fiscal measures, supervision of financial firms, and enforcement of rules designed to prevent abuse and excess. These tools are not static. They evolve in response to crises, technological change, and global competition. One major lesson of modern history is that financial crises do not announce themselves clearly in advance. They grow from a mixture of optimism, innovation, leverage, and misjudgment. When confidence rises, risk often hides behind complex instruments and attractive returns. Financial defense requires the ability to recognize these patterns early. It demands data, analysis, and the courage to act before problems become visible to the wider public. The Federal Reserve plays a central role in this process. By managing interest rates and liquidity, it influences the cost of borrowing and the flow of credit. In times of stress, it can provide emergency support to stabilize markets and prevent panic. This function is not only technical, it is psychological. Markets depend on trust. When participants believe that a strong institution stands ready to act, fear is less likely to turn into chaos. Fiscal policy also contributes to defense. Government spending and taxation shape the overall demand in the economy. During downturns, well-designed public investment and social support can reduce the depth of recessions and protect vulnerable groups. This protection preserves not only economic output but also social cohesion. A society that feels abandoned in crisis becomes fragile. A society that experiences support becomes more resilient. Regulation forms another pillar of defense. Rules on capital, transparency, consumer protection, and market conduct aim to reduce excessive risk and unfair practices. Effective regulation does not seek to eliminate innovation. It seeks to guide it within boundaries that protect the system as a whole. This balance is difficult. Too little oversight invites instability. Too much control can limit growth. The art of financial defense lies in maintaining this balance over time. American financial defense also extends beyond national borders. The United States is deeply connected to global trade and finance. Shocks in one region can quickly influence American markets. Exchange rates, commodity prices, and international capital flows all carry strategic importance. Cooperation with other nations and international institutions strengthens collective stability. At the same time, competition for financial influence shapes global power relations. The dollar holds a unique position in the world economy. It functions as a reserve currency and a standard for international transactions. This status provides advantages, including lower borrowing costs and strong demand for American assets. It also creates responsibilities. Maintaining confidence in the dollar requires sound economic management and political reliability. If trust in the currency weakens, the effects can reach far beyond financial markets. Technology has transformed the landscape of financial defense. Digital payments, online banking, algorithmic trading, and financial data platforms have increased speed and efficiency. They have also created new vulnerabilities. Cyber threats, data breaches, and system failures can disrupt markets and erode trust. Protecting digital infrastructure has become as important as protecting physical assets. Cybersecurity in finance is not only a technical challenge. It is a strategic one. Attacks can target banks, exchanges, payment systems, and government agencies. They can aim to steal information, manipulate data, or interrupt services. A successful attack can cause losses, panic, and reputational damage. Financial defense therefore includes investment in security technology, training of specialists, and cooperation between public and private sectors. Another modern dimension is the rise of complex financial instruments. Derivatives, structured products, and algorithm-based strategies allow risk to be distributed and managed in new ways. They also make the system more interconnected. A problem in one area can spread through hidden links. Transparency and understanding become essential. Without them, even experienced participants may misjudge their exposure. The education of professionals and the public is a quiet but powerful element of defense. Financial literacy helps individuals make informed decisions, avoid excessive debt, and plan for the future. It also reduces the likelihood of mass behavior driven by fear or misinformation. At a professional level, continuous learning ensures that regulators, analysts, and managers can respond to new challenges with skill and judgment. Confidence is the invisible foundation of the financial system. People deposit money, invest savings, and sign contracts because they believe that the system will function fairly and predictably. When confidence weakens, even strong institutions can face pressure. Restoring trust is often more difficult than maintaining it. Transparency, accountability, and clear communication are therefore essential tools of defense. Crisis management is a test of all these elements. When markets fall rapidly and uncertainty spreads, decisions must be made under intense pressure. Authorities must balance speed and caution, support and discipline, national interest and global responsibility. Mistakes can be costly, yet inaction can be worse. Effective financial defense does not guarantee that crises will not occur. It seeks to limit their damage and shorten their duration. The social dimension of financial defense should not be underestimated. Economic stress can increase inequality, unemployment, and political tension. These conditions can weaken democratic institutions and public trust. Policies that promote inclusive growth, access to opportunity, and fair competition strengthen the resilience of society as a whole. A stable middle class is not only an economic achievement, it is a strategic asset. American financial defense also includes attention to long-term sustainability. Public debt, demographic change, healthcare costs, and environmental risks all influence future stability. Ignoring these factors may provide short-term comfort but creates long-term vulnerability. Responsible planning requires honest assessment and gradual adjustment rather than sudden and painful correction. Energy markets, supply chains, and infrastructure investment have clear financial and strategic importance. Disruptions in these areas can raise costs, reduce productivity, and increase dependence on external sources. Diversification, innovation, and domestic capacity contribute to economic security. They reduce exposure to shocks and strengthen national autonomy. The relationship between finance and national security is increasingly visible. Sanctions, trade measures, and financial regulations are used as tools of foreign policy. They can influence behavior, deter aggression, and support allies. At the same time, they can create counter-reactions and unintended consequences. Financial defense therefore requires careful coordination between economic and diplomatic strategies. Ethics and integrity form another layer of protection. Fraud, corruption, and manipulation erode trust and weaken institutions. Strong enforcement, clear standards, and a culture of responsibility help prevent these dangers. The credibility of the system depends not only on rules but on the behavior of those who operate within it. The private sector is an active partner in financial defense. Banks, investment firms, insurers, and technology companies manage vast resources and information. Their risk management practices, governance structures, and investment decisions influence the stability of the entire system. Cooperation with regulators and adherence to best practices strengthen collective resilience. Innovation remains essential. New financial technologies can improve efficiency, expand access, and reduce costs. They can also introduce new risks. The challenge is to encourage creativity while maintaining oversight. Sandboxes, pilot programs, and adaptive regulation offer ways to test new ideas without exposing the system to excessive danger. Public communication during periods of change and uncertainty is vital. Clear explanations of policy goals, risks, and trade-offs help maintain trust. Silence or confusion can invite rumor and fear. Financial defense includes the ability to speak to citizens in language that is honest, respectful, and understandable. History shows that economic strength underpins political influence and social stability. From industrial expansion to technological leadership, financial capacity supports national ambition. At the same time, unchecked ambition can lead to imbalance and crisis. American financial defense seeks a path that combines growth with prudence, openness with security, and innovation with responsibility. In a rapidly changing world, no system can be completely protected from shocks. Pandemics, conflicts, natural disasters, and technological disruptions will continue to test resilience. The measure of effective defense is not the absence of challenge but the ability to adapt and recover. Flexibility, cooperation, and learning are therefore as important as rules and reserves. Ultimately, American financial defense is a shared endeavor. It involves policymakers, institutions, businesses, and citizens. Each decision, from saving and investing to legislating and regulating, contributes to the strength of the whole. When this collective effort is guided by knowledge, ethics, and long-term vision, the financial system becomes not only a source of wealth but a foundation of national security and social confidence. In this sense, financial defense is not a barrier against progress. It is a framework that allows progress to continue with stability. It protects the channels through which ideas, capital, and opportunity flow. It preserves the conditions under which freedom, enterprise, and innovation can thrive. And it reminds us that economic strength, wisely managed, is one of the most enduring forms of defense a nation can possess.